It's important that you understand the fundamentals of price movement. Jake's Wealth. Today, I was down an enormous amount on a position I took because I did not set my correct parameters. I was not on the right side of the trade. So I was down an enormous amount in my opinion. I go and I look at the percentage. Overall, I was down 4%. So what is that to worry about? You know, you're sizing in too big and not setting your losses, your support and resistance levels lower or higher, depending if you're long, up, short, down. Find the support and resistance up and down from where the price movement is. I got in the position and I saw like this huge loss and I was just distraught. And then I looked at the percentage and it was down 4%, which is not a major, doesn't take a lot to move back to 0%. So I monitored it and watched throughout the day and saw like good movement down. So I know like, okay, let's not get antsy about taking this loss already because it's only been 2 days. And I think that this is coming back in my favor and I will be on the right side of the trade. Unfortunately, when that happens, I'm not going to give myself the opportunity to take the profit, not at this stage, because when I make a mistake of sizing in too large on the opposite side of the position, I saw like a big loss and I'm like, now I'm down at the end of the day 1%, which is still a large monetary amount, number, or value. It's large for being down 1%, and I know that 1% of that should not be my risk. Like I'm way over leveraged in that position just based on looking at the numbers itself. If that was to get to 10% and you invested $1,000, you're at a $100 loss. That's a great amount. After 10%, you're really going to have to get lucky to have it jump back in the opposite direction. It's more or less of a 50-50 shot at that point that you're going to lose a lot more and you're going to be in that position for months to see it come back from a 10% loss. So at a 4% loss with momentum in the opposite direction, when I'm losing, I know that in my mind that I'm not going to allow myself to take a profit off this position. We're just going to get your money back. Unfortunately, that's the loss that's going to incur. It's more of a mental thing that I do from my standpoint, saying like you get rewarded for making the proper decision. It's not a good decision to be over leveraged, as in you're risking this much number, monetary amount, or value for the percentage that's being gained. Be patient with your position and monitor it. After you're down more than 10% on one decision, there's not a great chance that you're going to recover from that in a brief amount of time. If it's 1% and 2%, you watch the market move and you just know most companies that are trading between $0 and $100, they're going to bounce that 1% multiple times. Don't bank off that though. It's not the ideal way to do it. The way to do it is a better way to do it, or the best that I know of, is to set that support and resistance level, set your stop loss as fast as possible with room to breathe. If it's been all days chopping up and down, you don't want to get into the middle and think that you're going to take off from there. That's not likely to happen. You want to find the resistance, see if there's been a support level previously set on a higher time frame graph, maybe the 15-minute or the 4-hour or somewhere in the middle, and find the best place to set your stop loss based upon giving the price air and room to breathe. That's the most ideal way to come up with this, is to set that loss. That's number one most important, besides reading the graph. Also number one most important. Don't reward yourself for making the wrong decision. People get caught up in this investment game because they see a profit and they're like, wow, I'm just going to take this right now. And it's not the correct way to do it. There must be a process that you orient yourself around where you're risking less than you're making, and you're doing that consistently with patience, discipline, and clarity. If you're not in that mindset and you haven't set that investment correctly, don't reward yourself and think like, wow, I won this time, because 9 out of 10 times you're not going to get lucky if you're just trying to throw it out there in hopes to make a profit. Because when you see the profit, you're going to take it. Next time, you're going to expect that you're going to see a profit, and if you don't, you're going to see a loss and think that you're going to bounce back. You shouldn't hope that it bounces back. You should fear that it goes lower. You should hope that it goes higher after you've done one of the number one most important investment decisions, which is setting your stop loss so you can't lose, leaving you with unlimited upside potential. That's the greatest way to trade. And then it's just about learning like the price. Don't focus on 20 or even 10 companies at one time. You want to focus on one, because there's the same opportunity as focusing on 10 companies at a time. You can play it in advantage towards speed if you're making 10 investment decisions on if the price is going up or down, whether it be long, short, up, down, whatever direction you choose. Maybe you should just go long and short and read the graph up and down, and lock your screen on an iPad, turn it upside down, and see which way works better, when the price goes up on the screen or when the price goes down. And then it's going to move left and right, and now you're reading the left and right. There you go. Now that's like thinking 1%. You just layer that upon layer, and you become a 1% trader off of investor off of making those key decisions that distinguish yourself from the 99%. This isn't a secret. There is no secret. There's no right way to do it. There's just making the correct decision over and over, and having the probability to know when something spikes so high that you're going to see a pullback, and the opposite can occur. It doesn't have to occur. The trend should continue, so keep that in mind. So look at where you are in the time frame. Don't watch the 1 hour chart. Like, I get caught up all day. A 1 hour chart is like watching TV. It's like entertainment for myself. I just like watching the price move on that chart because it's so much more entertaining. You get more bars, and that makes you feel like more is going on, but less is more in this game. When you sit there and watch the 4 hour graph, you know that you have so much support and resistance below you. When you have a green candle or a red candle or a gray candle or a dark gray candle, up or down, sideways, left and right, the market moves up, down, left and right. Look at it from that point of view. If you have to, turn your screen 90 degrees, not 180 degrees, 90 degrees. So you can watch the price go left and right all day. See if it works better when it's going down or when it's going up. That's a key that will distinguish yourself from the next person in line who's just reading the normal chart like most intermediate investors would. And that's going to keep them intermediate. Like, it's going to be so uncomfortable when you first start something new. It always is. But then you get into the flow of things, you get a feel for it and know, like, is this going to work out? Should I invest my time and energy to see a gain in one direction or the other direction for a profit? Am I going to see this loss? Are you going to take this loss? Let's read the graph and see the higher time frames. Is there momentum that can bring it down to where you got into the position to, unfortunately, incur a break even, which is not positive when you break even. Once you get into the stocks and say you have a quarter of a day, half a day, 1 day, or a week behind yourself, and there's clearly support and resistance levels in your investments, then you can go ahead and begin to move your stop losses to where you can secure that profit. So worst case scenario, you make whatever profit that you do not want to give back to the market for that position. You don't want to be in with 100% of your investment, because then you could only be focused on one company, which in my opinion, what I'm doing, it's fine starting out. Even I can stick with it. I don't mind if I have to do this like I'm doing it in the future, because I know that there's upside potential for profit, and you're going to make more than you lose at the end of the day by playing your cards or using the keys to your advantage. Jake's Wealth. I'll see you at the top. Thank you.